Welcome back to the Stock Indicator Simplified Series. Today we are looking at volume spike. Volume spike answers a simple question: is this stock suddenly getting unusual attention? Volume means how many shares are traded. Most stocks have a normal rhythm. Some days are quiet, some days are busy. A volume spike happens when trading activity jumps far above what is normal for that stock. Think of volume like crowd noise. If a room is quiet, then everyone suddenly starts talking at once. Something probably changed. In the market, that change could be news, earnings, a breakout attempt, a sharp sell-off, or traders reacting to a big headline. On a chart, volume usually appears as bars under the price chart. Normal bars show normal activity. A spike is the bar that suddenly towers over the others. The key idea is simple. Volume does not tell you direction by itself. It tells you attention increased. Then price action helps explain what that attention means. For example, if price pushes above resistance and volume spikes at the same time, traders may watch for a stronger breakout. It suggests more participation behind the move. But if price drops hard and volume spikes, that can warn sellers are active, risk is rising, or bad news is being priced in quickly. Here is the common mistake: high volume is not automatically bullish. A crowded room can be excited, worried, or confused. You still need to check the chart, look at the trend, check the news, notice support and resistance, and ask whether price holds after the spike. In Signal Alert, add volume spike, set how large the volume increase should be, and create the alert for the stocks you want to watch. The goal is simple: let Signal Alert catch unusual activity so you can decide whether the move deserves a closer look. Visit Signal Alert.io and build your next market alert in minutes.